afternoon from Los Angeles and happy Tuesday. It's Alyssa Corum and Justin Nielsen here with a look at the stock market today. We're reporting to you live from our newsroom, and on today's show we're going to be taking a dive into the software group, a leading group this year, and checking in on the performance.
Yeah, sounds good.
Okay, but first let's take a look at the major indexes. The NASDAQ finished today about 0.6%, so did the S&P 500, and we had the Dow down about 0.7%, but all in all, we are still closing in on those highs even with this down day.
Yeah, and again, a down day here and there, it's just part of what you should expect. The reality is that we have had a phenomenal uptrend for quite a while. Since January 4th is when we went to confirmed uptrend. And so this is where buying early and buying right really helps a lot of your holding decisions and your selling decisions. So if you have that cushion, then it makes sitting through kind of days like this a lot easier. Or days like Thursday, when a lot of the leading stocks in the software group got hit, being able to sit through that is a lot easier if you bought early.
That's right. It's a process because if you buy at the wrong spot, then odds are you're going to probably get out at the wrong spot.
Well,
so
and especially if you buy when you feel like everything's okay, then you're too late. You have to kind of buy when you're still a little nervous and you're not sure if this is really going to work out. But
that's why we look at the chart patterns.
Yes, exactly.
The charts tell us.
Well, and we use the follow-through day. We use all of those signals. There's a reason behind it, because if we went by how we feel, a lot of times that would really steer us wrong.
All right. Well, also when we're buying, we like looking at leading industry groups, and the software group has been strong. And within that, the security group, we've seen a lot of strong names, some nice moves on earnings. Another earnings season right around the corner, hard to believe. But we're going to take a look in MarketSmith at our industry group for security software to see just how big of a run that we've seen that group, how big the performance has been this year. Yeah,
so we break the market down into 197 industry groups. So every stock is assigned to one of those groups, and you can pull those up on MarketSmith. So we're going to be showing you the computer software security. Now, one of the things I noticed in looking at a lot of our lists is computer software in general is just one of those groups that is getting a lot of weight. In the IBD 50, it's got like a 25% weight. In our IBD breakout stocks index, it's got about a 22% weight. So computer software is where a lot of action is happening. And so if you dive down a little bit deeper, you can go into computer software security, and that shows you, this chart right here. Now, if you don't have MarketSmith, you could use ETF like Hack as a gauge for the strength in this group if you wanted to.
Exactly. So, when you're looking at stocks to buy, clearly very important to see how the industry as a whole is doing, to look at the health there. But we're going to take a look at a few individual names, starting with CyberArk, which is one of the leaders in the group for sure. Just, looking at it right off the bat, that 99 composite rating, and it's on a pretty big run, a breakout not too long before a big move on earnings, and it's just been able to extend its gains and has been able to find support at its 21-day moving average. So, you mentioned a little bit earlier, buying right. Is it too late to get in on the leading stocks like this?
Ideally, what you want to do is you want to be waiting for some type of break, some type of base, or at least a 3 weeks tight, something that kind of gives you a good entry. But if you just buy something just because it's sticking straight up, you're normally going to be hit with a pullback. This actually went on leaderboard on January 28th. So early in the cycle, January 4th was our follow-through day. This was January 28th, and we're up 40% on that position. And part of that was that strong earnings. We had a little bit of cushion going into that. We got that big boost off of earnings, and we've been able to hold on to this. Now, we also had Zscaler in leaderboard. Now, Zscaler joined leaderboard after its big earnings move on March 1st. We didn't have as much cushion on that. And so when Thursday, when a lot of the software stocks got hit very hard.
And we'll move over to Zscaler. Sorry to interrupt you, Justin. We're still on CyberArk, so we'll switch on over to Zscaler. But as you were saying.
So on Zscaler, when you look at that and buying that on March 1st, we didn't have as much cushion. So that one actually we took off of leaderboard and we kept CyberArk on because we had the cushion, we had a lot more of a bigger gain, and so that really helps with your holding decisions. Buying early, buying right makes all the difference.
Yeah, and late last week we did see a lot of software stocks, not CyberArk though, but Zscaler did pull back some with the group. So
pulled back like 8%. I mean, it was a bad day, you know, and so it's a lot harder to hold through something like that if you don't have as much cushion. Now, we still exited that with a gain, you know, because we had that cushion from before. But it's really difficult. Those leaders pull back very hard, and it's very hard to hold on to them if you don't have that.
Yeah, and even with this pullback, it's still well above the 50-day line. Usually, we consider those first two rebounds off of the 50-day add-on opportunities.
Right. Yeah, this was just more of a cautionary thing because software was getting hit so hard, and in leaderboard we did have a lot of exposure to software. We just wanted to kind of take some of that exposure off, just in case as a cautionary measure.
That's right. And elsewhere in the group, we want to take a look at Symantec, which lost about 1.5% today after staging a breakout on Monday, a sort of a bottoming base. So even though it's a breakout, the fundamentals aren't quite there. It's not at the top of the stack of the group.
Yeah. If you do a comparison of this stock versus CyberArk or Zscaler, you'll see a much different picture. It's had some negative growth, its estimates don't look as good. This might be a turnaround situation, which, there's a compelling story behind that, but at this point, it's not one of the leaders. And so when you start seeing the breakouts in the non-leaders or the kind of also-rans, that should give you a little bit of pause. Maybe that's not the best quality merchandise to be buying.
Exactly. You want to be taking into consideration not only the technical action, but those fundamentals as well. There's a lot of moving parts, but to break it down just to the basics.
But what a lot of people forget is, because we spend so much time on charts, they think, oh, you guys are just chartists. But we always start with a strong story, a strong fundamental story. Bill O'Neill used to say all the time, 70 to 80% of his decision making was off of the fundamentals for the buying. For the selling, that's a different story. A lot of that is off the technicals.
Exactly. Well, it doesn't look like any of these leading stocks in the security software group are in danger of triggering too many sell signals right at the moment, especially CyberArk. All right, everyone, thank you so much for watching today. We hope you head to investors.com for all the latest stock news and analysis. And you can also check out our content across social media on Facebook, Instagram, YouTube, and Twitter. So follow and subscribe to stay up to date on all the latest. Thanks for joining us today, everyone, and we'll see you tomorrow.